Cathie Wood is the talk of the town after her ETFs are the best performing ETFs in the world. Cathie Wood, CEO of Ark Investment Management, is known for making bold calls. When Tesla traded at approximately $300 per share in 2018, her bear case saw shares climb 100% to $600 per share. Welcome to Fix Your Finances, Build Financial Wealth. If you want to build your financial wealth and fill your mind with the right information, make sure to hit the like button and subscribe for us to provide you with more valuable content. For Tesla shares, a whopping $4,000 per share over $1,000 benefited from the price they were at the time. What was their bold event? Adjusting the Tesla performance in 2020 for the 5-to-1 stock split will mean shares in the $800 per share territory. In 2018, the call appeared optimistic at best. However, her forecast is currently well within reach, with Tesla shares trading at over $600 a share. Over the last 5 years, the Ark Invest flagship Ark Innovation ETF has produced more than 100 annualized returns. It's easily one of the best performing ETFs in the world. 1/5 of the ETF's earnings are attributed to the fact that the fund has over 10 Tesla shares allocated to it. Cathie recently appeared on a Bloomberg program and was asked whether she still thought for the next 5 years that Tesla was going to be her best performing stock, or whether another stock would take its place. Her response was clear that the greatest upside will be in genomic space over the next 5 years. Doctors have been working on DNA gene sequencing therapy for years, if not decades, and now, combined with artificial intelligence, a new form of medicine appears to be on the horizon. For over 100 years, doctors have been studying genome or gene editing. However, it wasn't until 2009 that an editing tool called Crispr was developed, which made it easier, simpler, and quicker to edit the genome. What does editing the genome do? Scientists believe that gene therapy will be able to treat disorders such as cystic fibrosis, diabetes, and even cancer and potentially cure them. Gene therapy basically involves extracting healthy cells from the body of a patient and engineering them genetically to target the cells that cause the disease. In 2015, a 1-year-old was infected with leukemia by scientists in the United Kingdom with a form of genome editing technology called TALENs. The procedure has been considered a success, and the young patient seems to be healed by all accounts. Although genome editing has enormous potential ethical measures, the scientific community is still weighing security measures. Investors such as Cathie Wood are lining up behind genome inventories despite all the risk. And in terms of stock production gains over the next 5 years, she assumes they will become the next Tesla. Curious about Cathie's stocks in her portfolio of genomes? Fortunately, it's easy to figure out. Number 10. Personalis, ticker symbol PSNL. Personalis shares were down 12.1% at 3:48 p.m. on Wednesday Eastern Standard Time after falling as much as 15.1%. Following the announcement of the pricing of a public offer of common stock, investors are selling off the company's stock. Personalis has been on fire late on the market, rising by over 210% even after today's plunge in the past year. By raising some money, the genomics firm planned to benefit from its latest run. For $38 per share, Personalis is selling 3.95 million shares of its common stock. The healthcare company also grants underwriters a 30-day option at the public offering price to buy an additional 592,500 shares. At the close of yesterday's trading session, Personalis stock was worth $42.47, but the company's shares are now switching hands for $37.12 each. Personalis expects this public offering of common stock to raise $150.1 million in grossing proceeds. Number 9. Invitae Corporation, ticker symbol NVTA. In the last 3 months alone, genetic testing company Invitae's shares have risen by 90%. In fact, during the same period, the company's shares outperformed the S&P 500's return of 25% by almost 5 times. Investors might be wondering at this rate, could Invitae be a million-maker stock? This is one of the few times, as it turns out, in the investing world that anything seems too good to be true, but it doesn't. We assume that the share rally of Invitae has more fuel left and will definitely enrich long-term shareholders for years to come. Number 8. Fate Therapeutics, ticker symbol FATE. Overall, by the end of 2022, all three of Fate's pipeline candidates are expected to release their clinical results. Currently, if these therapies are competitive in the production and regulatory stage, Fate Therapeutics has more than $1.8 billion in possible payouts and an additional $1.2 billion to meet certain market milestones. The firm already has cash and investments of $319 million, including a $100 million cash injection in April from Johnson & Johnson Janssen subsidiary. Number 7. Exact Sciences Corporation, ticker symbol EXAS. Exact Science shares were down 9.2% as of 2:52 p.m. on Wednesday Eastern Standard Time. The decline came after weak fourth quarter results were announced by the diagnostics company following the market close on Tuesday. Exact Sciences reported $466.3 million in quarter 4 sales, up nearly 58% year over year and above the $446 million Wall Street consensus forecast. The net loss of $436.8 million, or $2.79 per share by the firm, however, was much worse than the average analyst forecast of a net loss of 22 cents per share. Number 6. Iovance Biotherapeutics, ticker symbol IOVA. Drug pipelines in the biopharmaceutical industry are gradually being applied to cell therapies, but Iovance Biotherapeutics was one of the first movers with its tumor-infiltrating lymphocytes. In reality, for 2 drug candidates in 2021, the company is expected to obtain marketing approval. A major milestone for the company and shareholders is the upcoming transition to commercial operations, especially if sales ramp up to levels that allow for operating income and positive cash flow. While the biotech inventory performed reasonably well in 2020, some of the enthusiasm has decreased. Investors who initially hoped for acquisition have come to recognize recent movements indicating that Iovance Biotherapeutics plans to remain a standalone company. Number 5. CareDx, ticker symbol CDNA. In response to forward-looking revenue forecasts that indicate a slowdown ahead, shares of CareDx, a diagnostics business geared toward transplants recipients, are dropping. The stock plummeted 12.2% as of 1:16 p.m., despite the company releasing an otherwise optimistic third quarter report on Friday. 3 months ago, when CareDx posted second quarter earnings, it expected overall sales would rise to a range between $123 million and $125 million. Management tightened the range to between $124 million and $125 million when announcing the third quarter performance, but didn't increase expectations at all. Number 4. Twist Bioscience, ticker symbol TWST. At the cost of profitability and operating cash flow, the DNA synthesis company has poured money into a rapid market expansion, which has forced it to finance the business through stock offerings. That's not a viable long-term plan, but it's one investor, and in the age of cheap capital, Wall Street has come to agree. Number 3. Crispr Therapeutics, ticker symbol CRSP, which did hold the top spot in this portfolio as of last week. CTX-001 is the company's drug candidate for sickle cell disease and beta thalassemia, 2 conditions that affect our blood's oxygen-carrying cells. Medical professionals extract their own bone marrow cells from a patient, use CTX-001 to edit the gene that affects the development of red blood cells, and infuse the cells back into the body. In 2015, a collaboration with Vertex Pharmaceuticals was developed by Crispr Therapeutics to develop a range of treatments using this technology, accepting cash, equity, and potential royalties. In return, Vertex got the rights to market the developed treatments. Number 2. Teladoc Health, ticker symbol TDOC. As the coronavirus pandemic forced the adoption of telehealth services into overdrive, Teladoc Health shares soared 140% in 2020. By purchasing Livongo Health for $18.5 billion last year, this leading provider of remote medical services also became a much larger company. Some investors are worried about what will happen to the hot streak of Teladoc Health once supplies of COVID-19 vaccines catch up with demand. Although the amount of acute care services the organization facilitates is likely to decrease, The difference would be made by demand for the unique chronic care services Teladoc acquired from Livongo. Number 1. Pacific Biosciences, ticker symbol PACB. The undisputed industry leader in the field of genome sequencing is Illumina. Since it went public in 2010, Pacific Biosciences of California, or PacBio, has been regarded as something of an also-ran. His long-read gene sequencing technology has historically been less precise than the competing short-read method of Illumina, and it comes at a higher price. However, its shares have jumped by 700% since the beginning of August after new leadership was introduced and a product update was delivered. The predictions of Will Cathie's performing genome stocks, as well as Tesla stock, come true. Given how bold her Tesla call was at the time, it is difficult to argue. But one thing is for sure, following the success of Tesla and her fund over the last few years, investors are paying much closer attention to Cathie's calls. And with that, it's time to end the video. We hope this session was informative. Do let us know in the comments section below. Subscribe for more content just like this one and share it with your friends. And make sure to subscribe and follow us on Instagram at FixYourFinances_. Also, don't forget to smash that like button and also press the bell icon to get notified about our new videos. Until then, fellas.